Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, thought leaders, entrepreneurs, executives, you name it, in the world of crypto, blockchain, all around the world. And today I have another amazing guest. He is the co-founder and CEO of self-wrapped Bitcoin platform DLC.link. His name is Aki Balogh. Aki, welcome.
Hey, thanks for having me on, Jimmy.
You're very welcome. Very welcome. So, and I hope I got your name right. So,
Yes, I've been called many things, but yeah, I know my legal name is Akos. I was born in Hungary, but I go by Aki. It's much easier to pronounce.
great, excellent. So, great to have you. And my first question to kick things off is basically, what is your background, and is it a logical background for what you're doing now?
Oddly enough, it is, careers when you going forward, when you're in a position where you have to make a career move, there's always certain ambiguity. What does the future hold? But then looking back, everything does make a lot of sense in hindsight. So I guess, as I mentioned, I was born in Hungary, grew up in Boston and Michigan. I started writing code when I was like 9 or 10. Got into it at 13 when I learned Perl, which added regular expressions, which were kind of the coolest thing in computer science back then, I think. Did a computer science degree, business degree, management consulting, private equity, VC. I was a VC in Boston in 2011, looking at data management, NoSQL, big data, which also machine learning and AI, both of which are relevant today with, of course, blockchain being kind of a new evolution of data management. And I also looked at marketing automation, and I basically created an AI content marketing optimization company called MarketMuse that I led for 8 years. And then all of that, I actually had heard of crypto early. I heard of Bitcoin in 2011, but I was already doing this AI MarTech thing. So I couldn't didn't really have the focus for it then, unfortunately. But they say the next best time is now. So 3 years ago, when I was transitioning out of MarketMuse, we put a CEO in there to run the company. I just devoted myself full time to crypto. And long story short, that kind of brings us to DLC Link, where I found this DLC invention that I can describe more. And my co-founder and I started building a company around it. And now we're 4 weeks away from launch. So we are launching to mainnet on Arbitrum in a month. We're launching DLC BTC, a safer wrap Bitcoin, and I can talk more about that too.
I think you're the first person who said they're launching Bitcoin on Arbitrum that I talked to. But but it's really interesting. So let's get into it. DLC Link, what is it all about? And let me see, what does it stand for? Discrete log contracts. How do they work?
Yes. So I guess I should preface it by saying when I came to crypto, I was not a cryptographer. I never have been. It's a very specialized art and science. So instead, what I had done also for my previous company is I like to find basic research out of universities. My dad's a scientist, so I grew up in a household, always talking about basic research and reading papers and that kind of thing. And so when I came to this space, a friend of mine told me about DLCs, and basically they were first proposed 6 years ago by the creator of the Lightning Network. There's an MIT researcher, Taj Dryja, who used to teach the Bitcoin course at MIT, and he proposed, quote unquote, smart contracts on Bitcoin. And that's what the original white paper was about. And so that idea, of course, has sort of been very exciting through the years. But basically, DLCs proposed a way where you could have, let's say, two Bitcoin holders, Alice and Bob, and let's say they put up some Bitcoin for a bet, like a sports bet, and then you have this off-chain entity called an oracle, called Olivia the Oracle. And then Olivia basically sees, who won the bet, which team won, and then the Bitcoin is moved to the winning party. That was the example that Taj used to describe how DLCs could work. And so, when we started looking at it, some of this made sense, some of this did not make sense. in terms of that specific example, because, how often do you see sports betting on Bitcoin? That was maybe more just a illustrative example. But long story short, we realized that what this could be, first of all, DLCs are not smart contracts fully. I would describe them as if-then statements. So if, and there's some condition that's evaluated on off-chain somewhere else through this oracle, quote unquote oracle. If that condition happens, then move the Bitcoin here, otherwise move it here, or else move this amount here and that amount there. So we realized it's an if-then statement, nothing more. And then we realized, well, who is that oracle? And really, who are these oracles? The thing with oracles, there's something called the oracle problem. If Olivia says, this team won, how do we know that team won? Is Olivia biased? Are there measurement errors? And so we realized in the world of crypto, the oracle should be another blockchain. so for example, Ethereum. So you have Ethereum validators, Ethereum chain. They have a state. They have their tracking value. What if we have Bitcoin controlled by Ethereum chain? That was sort of our first big insight, is what if we have smart contracts on Ethereum controlling the movement of Bitcoin between Bitcoin wallets? So that seemed really interesting. And then we had another breakthrough when we realized, okay, who are these parties? Who's Alice and Bob? And so for the purpose of what we're doing now, DLCBTC, basically we're creating a safer wrap Bitcoin. We're creating a way for Bitcoin to be used in DeFi on Ethereum. We realized for this purpose, it's kind of a special case, but we should only have Alice, basically. So Alice, and I'll kind of describe it in everything I'm saying, which is sort of high level theoretical, it'll make sense. So today, let me take a step back. So today, to use Bitcoin in DeFi on ETH, you have to use something called WBTC, Wrap Bitcoin. The way Wrap Bitcoin works is basically you take Bitcoin, you send it to BitGo, a custodian, they put it in their vaults, they give you WBTC, which is an Ethereum token, and then you can use the Ethereum token, take loans on it, use it in DeFi, and then when you burn it, BitGo sends the Bitcoin back. This is kind of the current state of things, and WBTC is a $13 billion plus TVL. It's a top 15 token in crypto, so it's used very widely, but everybody who uses it is sort of afraid that something would happen to BitGo, right? You have sent your Bitcoin to BitGo, not your keys, not your Bitcoin. If anything happens there, Bitcoin is lost. And that's sort of the known weakness of WBTC. But with DLCBTC, using this DLC construct, I could take Bitcoin and lock it with myself in a DLC. So I basically put it in this locked state that is this DLC, and the DLC can only pay out to me. So the way we've set up the DLC, Alice locks with Alice. Alice basically puts Bitcoin in, it can only go back to Alice. But when I put it in a locked state, that can mint an ERC20 on ETH that can be used in DeFi. So it's basically it creates a decentralized version of WBTC. So anybody with Bitcoin can now participate in DeFi, do investments, earn yield, take loans, whatever they want to do on ETH without having any kind of custodian or bridge or intermediary, because they've locked it with themselves.
That sounds like a wonderful solution. I don't have anything on BitGo, but I did have crypto on Celsius.
Exactly.
And that was a 600 plus day experience that I never want to live again. So
exactly. And that was our thought, that Bitcoin is huge. It's over $1 trillion now. It will be, I think, many more trillion by the time, but over the coming years. Personally, I think it's going to be that big. And it's too big to trust any intermediary, any custodian, any bridge. Anytime you send your Bitcoin to somebody else, not your keys, not your Bitcoin. Like, that's the first thing we learned in Bitcoin, of course. So no bridge, no chain, nothing will ever be big enough to hold Bitcoin other than locking it with yourself, just your wallet, your self-custody. That is exactly how Bitcoin, was designed, philosophically as well. And so basically the only safe custodian of your Bitcoin is yourself.
Yep. So that's one benefit. What are some other benefits of establishing trustless bridges between Bitcoin and Ethereum?
There's actually a couple as we have developed the LCBTC and now we're getting it ready for launch. We've discovered actually it's a pretty neat technology, a pretty neat product because one, of course, you've got the safety aspect. Two, we don't have to set up a chain. There are a lot of Bitcoin L2s, there are a lot of chains, a lot of bridges. It's great. I love to see the innovation, but we are not a chain. We are just using Ethereum as the chain. So you're wrapping from Bitcoin to ETH or burning from ETH to Bitcoin. So we don't have to like create a whole new chain and have like a token and have everybody like buy into the token and set up all these servers. We're just leveraging Ethereum's, quite, I would argue, quite decentralized state. There's this concept of like quote unquote sufficiently decentralized. I feel that ETH is sufficiently decentralized. But anyway, if you want to wrap your Bitcoin to ETH, you have chosen to trust ETH. We're not adding any other trust elements, as in terms of like having another chain. So that's another, it's just kind of more simpler, more elegant in that respect. It's also faster. So one issue with WBTC that traders, are quite passionate about is when you send your Bitcoin to BitGo and they mint that WBTC, that can take 3 to 12 hours to get back to you because they have to like receive the Bitcoin, move it between accounts. There's all this stuff they have to do that's fully manual. With DLCBTC, you're just using smart contracts. So you can mint within 3 to 6 Bitcoin block confirmations or 30 minutes to an hour. So if you spot an opportunity, you want to do a trade, you can be in under an hour and then do that trade and kind of maximize your profit from that. So traders really like that faster aspect. And it's also cheaper because, DLC Link, we make the software that powers this bridge, but we are not a custodian. We never receive customer funds. We're not a money transmitter of any type. We make software that let companies lock up their own Bitcoin with themselves. So we never touch it by design, of course. And so we don't have vault fees. We don't have kind of any type of deposit insurance. We don't need it because we don't have any deposits. And so we save a lot of overhead and we pass that savings onto onto our customers so that minting DLCBTC is 25% to 50% cheaper than WBTC, which, these institutions that are wrapping a lot of Bitcoin, it really makes a difference for them on their P&L.
It makes sense that they would. So where does Arbitrum fit into this?
Yes. So wrapping, so we originally looked at wrapping to ETH L1, which is still something we will do in the future. But just to start, the gas fees are kind of high. So a lot of people are using L2s. So we thought, let's just wrap Bitcoin to an L2 to start. And ARB is the biggest in terms of TVL and having a vibrant ecosystem. It's a leading L2. So we're basically launching DLCBTC on Arbitrum first, and then we'll be launching it on other L2s and L1 and other chains as well. So they're just the first venue where retail users will be able to acquire DLCBTC.
Got it. So a little earlier, you said people were gambling using Bitcoin. And I'm like, when I think of Bitcoin, I don't think of speculation. I think it being as a money, as a store, not just a store of value, but by Austrian economics, it's actually money and a harder form of money than gold, right? So, but Bitcoin does, and people say Bitcoin has a role in DeFi. And I'm like, when I think of DeFi, I think of Aave, I think of Ethereum, I think of different things. So you are currently transforming Bitcoin to be not just a store of value, to be useful in have a useful role in DeFi. What are you doing?
Yeah, absolutely. So, and that was also that original kind of sports bet analogy that didn't make sense to us either for the same reason. You've got the best asset that you can have. It's scarce. It's, there's a lot of, obviously Bitcoin price right now, it's hitting all-time highs because there's more demand than supply. The supply keeps getting reduced. It's engineered in a beautiful way. But when you're sitting on this Bitcoin and you're sitting on it for generations, it's intended to be generational wealth. that you pass on to your kids and so on, or when you use it as your safe store of value, censorship resistant and so on. Over the years, if you don't invest, if you can't invest it somewhere, or if you can't use it in somewhere, you end up eating an opportunity cost, and that opportunity cost starts adding up. And that's fine. Some people choose to just eat that cost, and that's not a problem. But I personally, I even have some Bitcoin miners. I have some Bitcoin that I acquired through dollar cost averaging. Like, I also want to kind of invest it so that it becomes a productive asset. And of course, you cannot stake Bitcoin. You can't just, it's not a proof of stake chain. So what you want to do is you want to, I mean, if you're like me, you want to use it in some form of finance. So there you have CeFi or DeFi, and CeFi in crypto has a spotty reputation, like what you pointed out with Celsius. I mean, when we came to this space, that's the only thing you could do, is to send your Bitcoin to a CeFi institution and kind of hope that they don't mess it up somehow. And there's it could be anything from fraud to theft to hacks to regulation changing the game, and I mean, anything can happen because crypto is a wild, highly volatile landscape. And none of these CeFi players have deposit insurance in any meaningful form. So basically, as soon as you send your Bitcoin somewhere else, puts it at risk, of course. So CeFi didn't seem to make sense for me, kind of from a long-term perspective. And so, of course, there's DeFi. And I've been talking about Ethereum, but there's also DeFi on Solana and other chains. So there's this kind of growing DeFi movement. DeFi has several, of course, benefits, being transparent. You can look at the smart contracts. It's building in the open. DeFi is not perfect, but it does seem like a safer, for me, safer place to do, investing and so on. And so basically then, so if you can get that Bitcoin value in a synthetic liquid representation, let's say on ETH, you can take loans against it. That's the common. If you want to do a trade, you can use Bitcoin as collateral. Bitcoin makes great collateral in these lending platforms like Aave. When we launch, we will not yet be live on Aave specifically, because they need a couple months of on-chain history until they're comfortable. But we do want to launch on Ajna protocol, which is a permissionless lending pool. We also have a standing offer with Maple Finance, where they will do loans on DLCBTC as long as it's $5 million of value or more. So they'll do larger loans, but Maple's an excellent platform. So we're going to be in a couple of lending pools like that to start. And then you can also have it on DEXs. You can use it as an LP token, earn fees that way. And then we also have some partners who provide options products. For example, we have a partnership with STS Digital out of Switzerland that will do covered calls on DLCBTC. And historically, they've been able to generate like a 10 to 30% APY doing these covered calls. And they have a bunch of different options products for whatever somebody's strategy might be. So we're basically, DLCBTC becomes a conduit for people and companies, institutions accessing various DeFi financial products in a safer way than what they can do with WBTC now.
Sounds good. Sounds like there's going to be a lot of options coming down the pike. So that sounds really good. So I want to shift gears a little bit, because I haven't talked to anybody about this platform, but I wanted to learn more. You talked about Market Muse, but I know you had a role in the creation of Shivo, the Shivo wallet, right? What was that role like, and what is the current state?
Yes. So I guess I would say I played a small role, but it was it was very encouraging, because of the first thing I did in crypto, the first meaningful contribution I made to the space, when I arrived in this space, I met a very brilliant team of engineers out of Hungary called Dakai, like DAKAI. And they were just brilliant. They already, by the time I had met them, these guys are like, I mean, I guess I'm not disclosing anything you wouldn't figure out, but they're in their 20s. Like these are just brilliant engineers, young minds. but they had already, by the time I met them, they had already done like 50 crypto projects. They work with the likes of Binance and Coinbase and you name it. And I just felt that they could really build kind of, they love challenges. I felt that they could build anything and do a great job. And separately, and so basically I offered to do kind of BD and introductions. I live in New York, so there are a lot of great firms here. They're in Hungary. So hey, if nothing else, I can, make some intros in New York. And long story short, I introduced this company to another company called Alpha Point, which is founded by a friend of mine, Vadim. And Alpha Point chose to hire them as a subcontractor. And Alpha Point then won the project to build the Chivo wallet, which the whole Chivo ecosystem, which they even run for El Salvador today. And so, long story short, my Hungarian friends got pulled into that and built that wallet. So it was just an introduction. I can't claim to have written any code or anything. I didn't do any of the hard work, but it was really cool to just see, because then the impact of that, when we look at our kind of life, and of course we have professional jobs and careers, we want to make money and we want to be successful, but when we look at the global impact, that's why I then started building on Bitcoin. Is the Chivo wallet launched, and it was right after the launch. It was starting to get used by something like 250,000 daily active users, which then quickly grew to 4 million cumulative users, which is kind of like the population of El Salvador. Everybody was using it. And I'm like, oh my gosh, what this means is that Bitcoin has, quote unquote, crossed the chasm. Bitcoin is something that anybody can understand, anybody can get behind. It's very simple but powerful, and that's when I chose to then build on Bitcoin specifically, because if a smaller kind of Latin American country can do it and reap the benefits of it, there's so many countries in the world that can benefit from having this out there. And I just saw kind of it's the first step in a chain reaction. So long story short, that's when I decided to build on Bitcoin, and then soon after I learned about DLCs.
That sounds great. Yeah, so I remember watching for the first time El Salvador build that mining facility on the volcano, and I was, this is pretty cool, you know. So
Oh
um
yeah, and it turned out to be financially too a brilliant investment for the country. I mean, I haven't checked what their P&L gains have been recently, but I'm sure they're quite happy.
yeah, I think they are too. So what's it, March? It's already like mid-March, right? And it's supposed to be, I mean, I think in the next 2 or 3 weeks, the next Bitcoin halving is coming up. What do you expect to see in the coming weeks, months, and maybe up to a couple of years from now, things play out as a result of the next halving on all these ETFs and everything that's going on right now?
Well, in the short term, I think the halving, of course, will cause some level of supply shock. The demand for buying Bitcoin is growing day by day, but supply is about to get restricted to half of what it was currently. So that's of course, there's sort of a mechanism there. The restricted supply increases the price. But I think more than that, so I have some, so I mentioned earlier, I have some miners. So what's going to happen for the first time, a lot of the miners, including my miners, will be underwater. Mining has been profitable. It's typically been like I think the point has been around like 9 cents. If you can pay energy at 9 cents a kilowatt hour or less, you can be profitable in mining. Now that number is going to go down to like 6. And most miners in the US, including where the facility where mine are hosted, are not going to be profitable from mining alone. And so now miners are going to get pushed to look for investment opportunity. In the previous 10 plus years, it's been fine to you could just mine it, sit on it, no problem, no pressure. Now you're not going to be able to clear, to be cash flow positive as a miner unless you have some sort of strategy for generating yield on it. Unless, of course, the price kind of skyrockets. But then Of course, the price will go up, but what if it doesn't hit exactly what you wanted it to, and so on. And the mining industry has been under a lot of pressure recently. Hash rate has gone up. Even during the bear market, hash rate went up by a surprising amount. It's getting more competitive. So long story short, miners, whether they are comfortable with it or not, miners like myself are going to get pushed to look at sources of yield and investment income, just to kind of pay their bills. And that's where I think DeFi historically, of course, Bitcoin and ETH DeFi people have been different camps, different ways of looking at the world. Totally cool. And not everybody's going to get comfortable with this new world, but I think we're in a multi-chain world. I think if we take the best of Bitcoin and the best DeFi options available, like the Aves of the world, I think those have sort of proven themselves as a more reliable alternative than others. And yeah, basically miners are going to start learning about Aave and ETH and even other chains where they could get yields. So I think these narratives are, the halving is pushing these camps together. And that's one thing I love about software is when different camps get pushed together, they come up with better ideas, better approaches. It ends up being a value creating event for it's uncomfortable in the beginning to learn something new, but it becomes a value creating event for everyone. So I think that even though of course my profitability is about to drop a lot, I think of the halving as a good thing, and I think it's going to create some really good financial products that are safe and reliable.
Okay. So some miners that will go into investment opportunities, that makes sense. To go into DeFi, that makes sense. There are other proof of work mining coins out there, right? There is Litecoin, there's Syscoin, there's Verge. Do you see a migration towards any of them?
I can give you my personal opinion on it. I'm definitely not an expert on the alternative proof of work chains, but it seems to me that if you have one big dominant proof of work chain, it just doesn't really make sense to have smaller, less secure proof of work chains. Kind of what's the benefit? Might as well just use the safer one. If your goal is asset preservation or capital preservation, why put it in a less safe place than a more safe place? The costs are not that much different for the store of value use case. You're just more worried about not losing your money.
Got it. Okay. And what do you see as happening in this next bull cycle in the next 1 to 2 years with Bitcoin? Obviously, it's going to go up. But what else? What else do you see happening?
Yeah, it's an interesting time now. I mean, I guess I would say, but first, our human minds tend to think in linear ways, and we're not really good at imagining nonlinear growth. I mean, who would have thought that? I mean, look, I heard of Bitcoin when it was like under $1. Of course, I have my own sob story about why I didn't go super hard in it then. But who would have thought that it could go from $1 to 70K plus, and then given that performance in whatever 12-year period, what does the future hold in 10 years, in 50 years? Our brains are not very well equipped at that. Of course, your question was for a couple of years out, but I mean, who knows? Who knows? I can tell you just anecdotally, I live in New York. New York was built on finance predominantly. Goldman Sachs, all the big ones are here. Of course, there's been several kind of anti-narratives coming out of like Jamie Dimon and some others over the years. But imagine when I look at all these, I mean, I'm looking at the Manhattan skyline right now, when all these brilliant, highly educated, very powerful financial professionals kind of wake up to what Bitcoin and ETH and crypto legitimately, the value it legitimately presents, they're going to have a oh crap moment where it's like, oh my gosh, we have to be in this in a big way. And when that capital and even more that expertise floods in, we're going to see an explosion of protocols, chains, value, use cases, products. I mean, we're still in very early days, but it's going to get big. So I actually think, we're just still in an early, whatever, we're in the third inning of a very big global game that has to do with our money, our capital presentation, our safety. Kind of, these are things that are very near and dear to everybody's hearts. These are things we work on. It breaks my heart when I see there's some Bitcoin movies. There's one where Somebody talks about how he's in Argentina and his parents lost everything they worked for, everything they owned. They lost it 3 times over during the course of their lifetime. And that breaks my heart. That should never happen. And Bitcoin is part of that solution. I think all the other innovation on the other chains is also. So I think we just cannot imagine when we have an influx of talent, brains, and money, highly passionate, motivated coming into the space. I cannot set a price target. We will see the results of that as it plays out, but I think it's going to be the biggest thing I've ever worked on in my life.
I agree. So, and I'm looking forward to the next influx of people coming in, and I know retail is still not here. Now you see some trends for retailers buying meme coins and stuff like that, but the retail that I know, people who my peers, my age, I tell them, okay, they ask me how they can buy Bitcoin. And I'm like, one of the ways to say, well, you can buy it on PayPal, you can buy it on Coinbase. They're like, what's a Coinbase? They don't even, So, but I think you believe that non-custodial self-wrap Bitcoin can take the whole entire crypto market to the next level, and they can bring in retail, right? How can it do that?
Yeah, absolutely. So, and I would even say, people tend to focus on price action. Of course, it's normal, something pops, people make money. We, as humans, we notice. But I do tend to approach these things from an engineering standpoint. The reason that I got into this space is a lot of the engineering solutions are beautiful. There's just really great built-in incentive structures and advantages. And so that's what, of course, we also focus on. We're just one step in a long string of in kind of a long value chain. And we're just, we believe we have a safer and I guess a more intelligent design, engineering design, leveraging this DLC invention that we did not come up with. So I think it's just kind of one step in a process. But I think what it's going to let people do is it's going to give them more peace of mind to use their Bitcoin in DeFi. Right now, when we talk to, just anecdotally, when we talk to trading funds and we talk to individuals, oftentimes we hear that they have chosen not to use WBTC because of the inherent custody risk. You get into Bitcoin because it's the most decentralized asset, and then the first thing you have to do is send it to one custodian that may or may not lose it, basically. And I think the world of Bitcoin, WBTC was a huge invention years ago when there was nothing. But it's the solution, I believe, is showing its age now that we have better options, and we are one of these better options. So long story short, it'll just give retail a bit more, retail and institutions a bit more peace of mind, a bit more comfort, and it's something that they can evaluate and look at the risk. Of course, there are always risks of a synthetic asset. We have two main risks. I can even kind of describe them just to get them out of the way. One is if there's a hack attempt or if there's a software issue, the Bitcoin cannot be stolen because it can only come back to you. But a hacker, let's say, can censor the unlock. So you have minted DLC-BTC, you burn the DLC-BTC, but your DLC doesn't unlock and you can't get your Bitcoin back because you're being held hostage. That might be, that's one form of smart contract risk that we're very upfront about. The other risk is that DLC-BTC is actually minted through institutions, kind of like USDC. With USDC, you have SVB and Wells Fargo kind of minting USDC. But if you want to redeem it for dollars, you have to go back to SVB. In our system, we have DLC-BTC merchants, like Amber Group is our first merchant. They're minting it. So if Amber Group, chooses not to redeem or cannot redeem, you can't get Bitcoin for it back from them. So, but that's kind of how USDC also works. And we have, at least in this case, you have Bitcoin on chain and a locked state, you can verify it on chain. So anyway, those are my disclaimers for the two risks that everybody needs to consider. But if you have become comfortable and you choose to use DLC-BTC, despite those risks, you can, use it in these protocols, earn a yield, and just, do something with the Bitcoin that's normally for most people just kind of sitting there in their wallet, kind of lonely and unused. So if we can help or enable people to generate some investment return, we will have honestly done our part, with this project.
Sounds great to me, and thank you for. I learned something new today about the smart contract lock risk. I didn't even think about that, so it's always good to learn something new. So I want to thank you very much for your time today. I enjoyed speaking with you, and I have one last question, and it's how can people find out more information about you, about your company, about how they can use your platform, any of that? How can they do that?
Yeah, absolutely. So if you're an institution and interested in being a DLCBTC merchant or just learning more about that program, please come to our website, dlc.link, or find us on Twitter, DLC_link, and you can reach out there, or there's a chat bot or whatever. You can find us. There's also a form you can use to register your interest as an institution. As retail cannot mint or burn DLCBTC directly. They cannot use the bridge because of this merchant system I mentioned for various safety reasons that we have some blog posts about. But retail will be able to get it on DEXs and SEXs. So right now our plan is to launch on Arbitrum on Curve. So it should be on Curve. There should be a WBTC DLCBTC Curve pool in about 4 weeks or so. And then we are looking to launch on several exchanges. The first will probably be MEXC. So that should be live sometime in a month or two as well. So similar to WBTC, you have to either swap Bitcoin for it or buy it. So that's just kind of how retail can interact with it. But once you have the DLCBTC, you'll be able to use it in various lending platforms and so on. And we're going to have a dashboard where you can see all the places where you can use DLCBTC. So as soon as all of this is live in a few weeks, I just invite everyone. It should be accessible through our website. So basically come to our website. Long story short, come to our website. The information should be there. And if you have time, please be sure to read our excellent blog posts that our content writer Josiah wrote many of them. I wrote some of them too, but the blog posts really describe everything from our philosophy to the mechanism to the risks to the uses. So I highly recommend our blog.
Awesome. Thank you very much for your time today.
Thank you. It's been a pleasure.